The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line.
And then some, I think,
The
better
webinar
news.
will begin
So first,
shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. Happy Tuesday. Thanks for joining us for the Trade of the Week webinar. Before we get started, let me know in the questions panel if our sound and video is working. Thanks, Mike, Dave, Todd. Thank you, friends. Before we get going in the afternoon, we ask a couple of questions. The first one is up on your screen. Do you currently have an active subscription with us? Yes or no? This lets us know the mix in the room. And while you're voting, I'll remind you all that you have to use the questions panel to interact with the presenters. If you do have a question, just go ahead and ask it in that panel. We'll try to reply. If you have a question for something that you'd like to see them demonstrate or ask about a specific stock or something, wait until they're taking questions from the audience in that section. That way they won't miss it. Let me share that out. So it looks like we've got 65% already have a subscription, the remainder don't. Those of you that do not yet have a subscription, keep in mind we do give out a discount code, a promotional code that you can use to start one up and save some cash. We give that out later on in the webinar. If you are a subscriber, are you on regular trade ideas or premium? Premium is the version that gives you access to the AIs, the AI channels, the ability to back trade using the odds maker, the ability to auto trade AI strategies using Brokerage Plus with a compatible broker. And you can open extra charting windows and access the RBI, GBI advanced windows. That's sort of good stuff. So it looks like a little over 60% of the subscribers in the room have premium. If you're on standard and decide you want to get those extra features, grab that same code we give out later on in the webinar and apply that to an upgrade. It'll also save you some money. Your hosts, as usual, on Tuesdays are Steve Gomez and Andy Linloff. And we're going to record the session. You'll get a reminder email tomorrow with a link to the playlist where you can find that recording. So I'll go ahead and start the recording and let these guys take over. What's been going on this Tuesday, Andy and Steve?
All right, thanks, Scott. Hey, Andy, everybody.
Hey, Steve. Hi, Scott. Hi, everybody. Welcome aboard.
All right, yeah. Let's get going while the regulars file in. Go through a few of the slides here. We're in March now. And just a regular reminder that we're a software company, and Andy and I are employees of the software company, but we also trade our own accounts and have opinions from time to time, but those should not be construed as financial advice. There you go. For those that are new and joining the platform, Andy and I have been using it for a very long time, since the beginning, literally. And we've seen a lot of layers on top of layers come and go and add to the features of the program. And so it's a very feature-rich program, and it's not something that you really can learn overnight. And so we do our best to try and help people custom tailor the program to get what it is they want to get out of it. And again, it's not going to happen over the phone. It's not going to happen in a couple of days. You got to give it a week or two to really start to learn how to use the program the way in which you want to learn it. The way in which we help you do that is, without a doubt, every day Barry toes the biggest line and carries the most weight on real-time support. He encourages people to come in, whether you're in his real room or the YouTube live feed, and ask questions, and he will demonstrate for you. He's very generous with his time. And then we give him an hour break during the noon session, and one of us will fill in and kind of bring a different flavor to the live stream. And again, a lot of support can be done there. And even if you don't always have a question, pull up a chair and look at the other questions that are being asked. You know, I went through a couple of scans kind of from nuts to bolts on how to find things, and it'll turn on some lights in your brain to kind of help what you're doing. So again, you're not going to learn this overnight, but be patient, give it a week or two. Certainly give it your first month subscription, and let us help you drive it the way you want to drive it. There's the link below. If you don't have the link to the live stream I was just talking about for the noon session and Barry's session as well, that'll redirect you to the YouTube live stream. And then once you've watched it a few times, the YouTube knows that you like it, and you'll be able to catch it every day on your dashboard. All right, lots of good stuff to talk about today. And the slide that we always kick it off with is man and machine combined. No human is better than a machine, and no machine is better than a human with a machine. So we got to work together, and Trade Ideas does that for us by curating ideas in real time for us to act upon, whether it's our own scans, which I'm going to show you one today that it's the oldest scan there is actually. And, or if it's the AI, you work together. The system brings up the idea and then you got to manage it from there. There's no just plug and play, as it were, in the market. Trade Ideas is a great tool to kind of help you mine the right veins for the right stocks and right minerals that you're looking for. We're here to help. So today's agenda, we're going to talk about a few things. I have a lot to talk about, I think, this time on the market recap. There's some interesting things going on, and I know Andy might chime in as well. Boy, today and yesterday, the AI put up some interestingly strong trades. Andy will go over those. Trade of the week finally took it easy on us in terms of the timing. The timing's never perfect. We've had a lot of trade of the weeks blow up with giant gap ups in the recent future, but this one, recent past, I should say, this one was a really, really textbook, beautiful trade of the week, and I've got a lot to talk about, so we'll talk about that. And then, as promised, I'm going to revisit something that's maybe some of you haven't seen. It's called the horseshoe alert, and talk about that. It'll tie all together. You'll see what I mean. And then if we have some time, we can set some alerts and maybe some chart requests, but we'll go from there. All right. I'm going to start with the Nasdaq this time, because the Nasdaq technology is what led us up. And sometimes when things change, the leader can sometimes turn into the leader on the change. And so the way the chart is really shaping up here is raising a few caution flags. Let's just put it that way. I'll just tell you straight up, I'm not long anything. I'm sitting in cash, and I'm sitting in a lot of PSLV, the trade of the week from 3 weeks ago, which blew up on a giant gap up. It's a whole other story for another day, but I'm not bullish on stocks right now. And one of the main reasons is, again, the technology led us up, and technology looks like it might be going to give us a little bit of fits here. We all see what happened over the last week, but we've bounced right up into what I call the armpit. I've used that term before, and it's basically the rolling moving averages that were once supporting us back here are rolling and crossing, and now they're acting as kind of upward resistance to getting all tangled in there. And the Nasdaq had a horrible close today. Q's closed very weak. They never really looked much higher over than their opening tick, and doing so right in the armpit, or the pocket, as an old trader friend of ours used to call it. I like the armpit because it's always a better visual. And look at the volume too that we've had here, and the volatility, shoots and ladders, big red candles, big green candles. Sometimes some of the biggest intraday up moves are when a market is changing. The buyers buy the oversold dips quickly and push them very high very quickly. And so I'm seeing all the handwriting on the wall for possible winds of change, and it's much more prevalent in the Nasdaq here. And I'm going to do this. I'm going to call Andy out. We've been trading in a fund with 4 of us in this fund for about a year now. We've been really dialing it in nicely. And this is Andy's second attempt at Tesla, and he did exactly what I'm talking about. He had a good short back here under the moving averages once it broke, anticipated it, and covered on this wonderful day here. Patience, waited, and then the consolidation is just like I talk about on the upside, consolidating price, but now instead of being supported by our 10 period, we're being repelled by it. And as the price moves up into it, Andy took a really nice entry, near the high end of the candle today, anticipating this bounce up into the pocket, up into the armpit, which I will call it. So there's that. I haven't even talked about this one, Andy. Did you know Target and Zoom Media had earnings? Let's take a look at how the market reacted to their earnings.
Yeah, I knew Target. I did not know that about Zoom, but
so it's not always how the earnings are presented; it's how the market reacts to the earnings. And I'm following Mackie on the retail guy that we've had speak, and he said, those were good earnings, and the market's reaction to those earnings are attention grabbing. Okay, that's a little interesting scenario under the rug there. Zoom Media, the darling of the COVID-19, also had pretty good earnings, and the market said not good enough. So when you're starting to see reactions like this to not bad earnings but good earnings, It's another caution flag. And I mentioned Apple, and he pointed this out last to me as well. Another one of the Nasdaq darlings that have broken, and it's kind of the same shape as Tesla, bouncing back up into the armpit a little bit. So that's the backdrop of technology. Technology led us higher, and I feel like technology might be about ready to pop a head and shoulders kind of action on us here. We'll see. I'm not short. Well, I shouldn't say that. In another account, I have some VIX, but I'm certainly not holding longs, waiting for the buyers to come back in and continue to drive us higher. I'm just not in the mood for that right now. Last week was just a bit much for me. And when I see that, I take my ball and I go home, and that's okay. You can do that sometimes. It's healthy mentally and can be healthy financially. So that's the worst of it. So the spiders, okay, we've got financials and we've got energy. They're kind of helping this thing stay a bit more buoyant. But today, it also threw out a clunker of a close. Didn't close on highs, fell back into the mess, kind of into the tangled, not as much of a defined armpit because we didn't have as much of a fall. But it's just a mess up here. And I'm not going to try and pick a winner. The old art of war, when you come across, two factions, which is typically what these trade of the weeks are. The consolidation are two factions, the sellers and the buyers fighting it out. And then you wait until you get confirmation usually of which faction is going to win, and you jump on their team and participate. So I don't know which way the SPY is going here. I have a much more ominous feeling in the Nasdaq. I can say that again with certainty. The Russell 2000 isn't giving us much either, kind of like the SPYs. But when I see the underpinnings of Apple looking one crapple, it's a word we used to call it before they became the real Apple. Apple doesn't look healthy. Tesla doesn't really look that healthy. These were darlings. What's Amazon looking like? Amazon's not looking that great. Amazon's fighting its 200-day moving average. Mm-hmm. All right. So there's probably other examples that I could give, but the underpinnings, I'm not digging it. I'm not liking it. And I'm with Andy. I'm starting to say we can start to look for some setups here that look like this and participate. We're in a kind of a shift perhaps where maybe you can make some money on the long side like Vuzi we'll talk about in a second. And there's also some setups where you can start maybe making some money on the short side. So that's my thought on the backdrop of the market. If you want to add anything.
No, I totally agree with you. I have been long very little. I was fortunate enough to be long Rocket into earnings, yep. So I was very fortunate there. My only other position is short Tesla, and I've been long SDSs for a couple of weeks now. Barely up in them, but that's okay. I'm just kind of being real defensive right now. And another great example I want to give is you notice when these setups and little pops you get don't last as long as they used to. In other words, you used to get maybe 2, 3, 4 days out of a good setup and a good move. Steve's going to show you in a minute that Fuzi, which is a great call by him. And I'm telling you, when you guys see like 10 to 15%, take the majority of it off because they're not lasting very long. And it's just the environment we're in right now. That may change over the course of time, but right now, you got to take profits quick, is my opinion. Mm-hmm. But I agree with everything you said. I got not only that, I just got a weird feeling, man. Something doesn't feel right.
We've both been doing this a long time. Both of us kind of have a weird feeling. And then another friend of mine on social media had kind of an odd feeling too. He can't put his finger on it. So you got the old gray-haired dinosaurs kind of holding their stomach, moaning a little bit. Maybe pay attention to that. Mm-hmm. All right, that's all I got over here.
All right, that's fine. Yeah, you covered it well. I'll take over and oh gosh, I'm Brad today, I guess.
That's all right. I can change it for you if you want.
No, okay, you can change it while I'm showing my screen here. All right, Holly. Well, let's always take a look at the SPY here and see what she had to work with today, which was not a lot. Looks like the highs of the day were the open and a lot of back and forth action, closing on lows. I can promise you guys this is going to make it hard on any strategy that may be, especially an AI type strategy. It's just going to make it difficult because you had no direction with a slight bias to the downside, especially on the close. So it made it difficult. I am going to point out a couple of trades, and I'm sure you guys heard it in Barry's room because I think probably one of the best calls was a stop out today, and that was Rocket. Okay. Just keep in mind that when you get these huge volume, gap up, breakouts, these can get pretty volatile. Okay. Holly's equipped, right, with stops that are not going to get you in trouble. Okay. But at the same time, you got to treat these a lot of times as ideas. And this was a great idea. And you can see the stop out there on one drive down. Otherwise, it was pretty much sideways all day. So I'm going to be in the camp that if you were stopped on this, you don't usually hear me talking about trade arounds. This is one you should have probably kept your eye on. I mean, the relative volume was over 32. Okay. You had a breakout of a multi-month high here on the daily. And looking over here technically, boy, I was saying to myself, like I said, I've been in this since earnings at $20, and I actually bought some more the day after. But when you look over here and you really, your next major resistance, I think, was all-time highs right over here. So I obviously don't know it's going to go there, but at the same time, with that kind of volume, and this is one you should have kept your eye on. So even though I'm not one to pump aggressive, I don't like that risk segment or a risk parameter because it's dangerous because there's no stop. This is one I will say you probably, if you did trade it and got stopped out, you probably should have kept your eye on it and look at that volume that came in. And I'm sure Barry in the room and a lot of the people in the room did do that as well. Other than that, I thought probably one of the cleanest and best trades out there was this short in INSG, basically 10 minutes after the open, was just a beauty. Breaking down here on the daily, you can see it looked like it was a earnings going back to, yesterday. So let me zoom in a little bit. And you can see there, a great call right at below the 200-day moving average. Earnings play, volume was there, and a beautiful breakdown, and just basically no pain all day hold if you wanted to on that one. Another one, the CCL long was okay, but I'm going to focus on this this SW CH, which I thought was a nice trade. Once again, it was a breakdown, short pullback. There was your signal, no pain really, and dropped all the way down to below 15. So a nice trade there. Did bounce back there at the close, but I thought that was a good opportunity. But I think Rocket is the big call, and Snap's a good example of what I'm talking about, guys. The setup was there in Snap. Okay, there's your signal. It had a nice little beautiful setup there with it bouncing and holding this 10-period moving average the last couple of days. You had your open, and it shot up, took out yesterday's high. But look at that, and this is what I'm seeing in a lot of these setups. So be careful out there, because I'm seeing a lot of good traders take these setups that several months ago would have worked like a charm, and they're just not working anymore. And that tells me simply people are taking opportunity, especially on these high flyers. That's why I'm short Tesla, to really take profits that, especially you've been sitting in these things for a long time. But that's about it, Steve. It's a so-so day for Holly, but I think that Rocket was a really good call, and the one you should have kept your eye on.
Yeah. Somebody in my, I was going to say, somebody in my noon session, Sam, was eyeballing it before it took off. Hope you got it.
Mm-hmm.
Speak up if you're in here, Sam. All right. Where am I? Is it trying to come back to me? There we go.
There you go.
All right. So, geez, I actually wrote some notes down about this one, so I didn't really miss anything.
Okay.
First thing I want to do is what I always do. What did we see on the weekend? What was I just talking about? When you come across two factions, it's best to wait until you pick a side and see who wins before you pick a side. Sure, you can do that, and that's the wait for the bar clearance, which is kind of what we had. I raised it up to 20. The psychological level 20 was our entry right there. Sometimes I will actually anticipate, maybe join the fight, assuming that, hey, you have a nice trend here, a nice consolidation. Let's jump in and anticipate, maybe add to it, if it goes. But for the sake of the trade of the week, we have to have a trigger, and we just use the round number of 20. Just so you know, Discovery A shares was also on the short list. If you can see what I was seeing there, right? And there's 2 days later. So, this is the kind of stuff that the A table has in there. Not every single one is going to show it, but I scanned through it. And what was nice was that we didn't have a giant gap up this time. So let's click on VUSI. It's still on the A table junior down there because it's still under $25. And let's switch over to what happened on the entry. Okay, so no time machine here. We've talked so much about the gap up and how to play the gap up in the last 3 weeks because we've had so many. Well, we got another one, but it wasn't too bad. Let's look at the first couple ticks. Okay, so 20, let's just call our entry. We'll mark up our entry at 20. That was supposed to be our trigger. We gapped above our trigger. So, you're welcome to chase the gap, but what I've said in the past is it might be wise to wait for this 10-period moving average to come up and see what happens when it meets the price. And that is usually the point of a good entry on a gap on a strong stock. All right. So let's go forward a little bit. This was the moment in time where I said, oh, look at that. Okay. This is exactly what I was thinking. Still a lot of space in there. I got a webinar to do tomorrow. I would just love to nail a buy tag in the mirrored account perfectly, right on that 10 period. So I could show everybody how well this works. And well, when you know it, I got way too many tabs open over here and I got distracted. So I'm not participating in this trade. And maybe that's a good thing, you guys. Maybe the evil trading gods that don't have a sense of humor are forcing me to sacrifice a good trade so everybody else can have a good one. If that's the case, then I'm happy. So be it. But I missed it. I missed the opportunity. It's not the first, it won't be the last time. It's just, it happens. And by the time it got up here and I heard the AI trigger it, I thought, well, I'm not chasing it. Okay, well, it's statistically probable. If the AI said buy it, maybe that's a good probability. And then I said, wow, look at that. That's the old horseshoe pattern that I've used a lot of days in my life as a day trader, but I'm no longer a day trader. I'm a swing trader and I wanted my perfect entry and I didn't get it, so I let it go. But there's a lot to talk about and we'll come back to that. So my entry of 20 was interestingly enough confirmed by the AI at 21. We'll come back to this down here, but this is yesterday's AI. I'm just kind of highlighting the trade there in yesterday's AI of VUSI. And it's a strategy called horseshoe up. So that is the very first strategy that Dan asked me back in 2003 when I was the first user beta tester of a trader of trade ideas. Dan said, if I can build it, what would you want to see? I'd say, all right, Dan, I want to see in real time a stock that gapped up and then came in and started to fill a portion of that gap and then turned and went to highs. And the moment it goes to highs, that's when I want to see it. Because back then I was day trading. That was like my favorite bread and butter setup. And there's a guy that came in who was successful and he showed me and just sold me on that particular setup. So at the time, rather than knifing through charts, manically looking for that type of setup, I thought, boy, if I could have an alert program show me that setup in real time. And he delivered, and it blew my mind, and I've never looked back since. And of course, Andy quickly joined in, a month or two later, if that. So a little bit of backstory. I'm not trying to get too non sequitur here, but horseshoe pattern. I missed the entry. Hopefully you guys got it because, let's be real here. It dipped right down into that level for a good portion of time. It lined up perfectly. And again, I wasn't paying attention. I was distracted by something else. All right. So now, just another beautiful example of how the 10-period simple moving average, whether you're using this in a Holly trade or whether you're using this to manage your own momentum intraday, it works like magic. It just continues to hold the price up. All right. So now the AI sells at the end of the day because that's what it does. I want to come back over to the intraday chart. I'm sorry, the daily chart, because what I do and what we're talking about today is swing trading. And you've probably heard me talk that swing trading to me and Andy is like surfing the market. We try to find a nice setup. These things we just looked at, VUSI and Discovery A, position ourselves and start paddling and then ride the wave and do a couple of sweet cutbacks. But that's short-lived. And even before Andy talked about it, the perfect trade to me on the really good ones that go bonkers on the first day for you and give you that 10, 15, in this case, almost 25%. Those are about a day and a half. And I'll just say it again, day and a half, day and a half. There's something magical about a day and a half. So if I was in this trade, which I wish I was, when you get moving day, I've called it moving day before, where a giant green candle on good volume just catapults out of the congestion and definitively closes at or near highs. You got yourself a nice big long green candle. You don't want to sell that close. You want to stick around and see what tomorrow brings. And so that's when the half comes in. And there's a couple of different ways, the stock can open. In this case, it opened with a bonkers, crazy 15-minute bar. So if it opens with a giant gap, take the gap immediately. Don't even ask questions. Sell at least half of it. That's your day and a half. The half is literally the gap because you got it so quickly. Or maybe it trades up very quickly on a nice early morning green bar. I would take that too. Take that as your half a day. Or if it just kind of grinds up slowly, but you start to get close to lunchtime, that's probably your half. Because what's happening is the people that were fortunate enough to participate and risky enough to take the price home overnight, they want to get rewarded for the risk that they took overnight. And so that to me is just the perfect trade. So I looked left over here and said, wait, if I was in this trade, I would be a seller of at least 1/3 or a half right there at that prior candle. And the way that worked out, let's see how that worked out. Let's move this line up here. Let's see where that corresponded to today. Here we go. So yeah, selling some right there would have been nice because it didn't take long before people with the same idea and the same profit motives and greed factors and demons sitting on their shoulders start tapping them and saying, we missed our opportunity, let's get out. So the point is, this was a beautiful setup. It was a beautiful execution. It was a beautiful example of how to manage a gap up and be patient and wait for this moving average to come up and catch it, take your entry. And then if you get to ride it all day long and you have a green candle at the end of the day, hold on for the ride tomorrow, but instantly flip into seller mode on day number 2. And somebody asked me today, they said, well, what about Boozy now? I said, well, it's broken now. It's like a wave that I've paddled out of and it's just breaking towards the shore, and maybe it'll go set up again and show up on a scan somewhere else, but I'm not really interested in it anymore. It made its move. Like Andy said, 10, 15%. You're foolish if you don't start banging out profits on those types of moves, especially if you get on the first day or a day and a half. All right. So, a lot to say on that. Let me see if I missed anything. Pretty much, yeah, talked about everything.
Just explain your blue bar.
Blue bar.
On the 15-minute chart.
The blue, the blue line?
The blue line, I'm sorry, yeah.
Okay, so this is a 5-day moving average, and I use it a lot. Let's see if it even came into play back, if we backtrack a little bit. The Qs broke it at the end of the day. So to see how midday the SPYs held that 5-day average. This is kind of a secondary to the 10 period. And the way in which you get that on the 15-minute chart is just go to indicators and then add a simple moving average and assign 130 as the value. So you're taking 130 15-minute candles and smoothing that out, and it gives you this kind of perspective, and it comes in handy sometimes. Hopefully that's what he was asking about.
Mm-hmm.
Okay, so we talked about the horseshoe, and we talked about how there was the very first strategy I ever used trade ideas for. And so I submitted the horseshoe kind of as it is or as it was to the AI, and the AI Holly took it and messed with it and back tested it and did whatever. I have no idea what the horseshoe strategy in the AI looks like as far as the configuration goes yesterday, but it came through. And I thought, well, you know what? I haven't played with my horseshoe strategy, and one thing I haven't played with it is I wanted to marry it up with the score, which is what I've done with the A table, just taking our composite rating and just saying, what if I took all the stocks that were a 75 or an 80 score, so they should be a pretty decent looking chart, and said show me the ones that are giving me a horseshoe. And so I built that today, and let's just look at it real quick. The way in which you do it, it's called the False Gap Up Retracement. That's the event. That's the algorithm that Dan and Phil built for me back in 2003. And this qualifying window basically says, well, how much of the gap do you want to be filled? And so I've always just used 30%. So literally, the algorithm will look and make sure that the 30% of the gap was filled from the opening tick. And then my filters are just simply above $5. I don't want to see this until 20 minutes after the open. This is a setup. This isn't a gap and go. I want this to set up a little bit. And then it looks like I dipped down to 70 on the stock composite rating. So today, let's see what it gave us. And again, my favorite time of day to use this is right around the top of the hour, at 10 o'clock Eastern. So it'd be 7 o'clock my time. All right, so there's Dow. That one almost looks like a gap and go. Yeah, not much out of that. YOLO, what a great name that was. And YOLO did not work. They did not live once. Square was interesting, gapped up, came in, went back to highs and gave some morning push. Now remember, guys, the backdrop of the market was some selling for the rest of the day. Nasdaq was selling from the opening tick. So, you know, some of these might have worked a lot better if the market was strong. Carnival gapped up, came in, went to new highs. Hey, gave some alpha on the, oh, look at that. It was a Holly trade too. I'm 2 for 2 matching up. This is not bad at all. INFY, pretty good daily chart. It's gapping out of a range there. And hang on one second. Let me fix that. There we go. And move back to highs and just kind of ground higher for the rest of the day. I'm going to go to yesterday and just show you, you know, yesterday we had at one point on this particular scan, there it was, boozy. So there's the buy tag yesterday. Let's go back. You can actually see that. The buy tag was the AI, but when I click on my scan here, boozy yesterday, and scroll back again, that blue arrow is indicating the candle at which this triggered on. So my old scan and the new iteration of it with the score and the AI kind of met up yesterday in a crossroads. So
Can you show?
Yeah.
Can you show what's your percentage of gap fill that you're using on that one?
Yeah, it was 30%.
Question. Okay, yours is 30. 30%. Okay.
So you could change that to 50. And here's what's nice too. You can see what's cool about the quality. Okay, ABB took a while to close. This one didn't. It took midday before this one peeked its head up and then kind of wallowed around. But look, you get a really nice description. Crossed above the open after a 50.94% gap closure. So it's always neat to see that, and you can kind of eyeball that, and you can see, yeah, look at that, it went about 50% there. So I use like a 1/3, 30% is good enough for me. All right, so let's see, what else was I going to talk about in terms of that? I guess that was it. It just seemed like a good time to revisit that. You know, I know what it was. I tried to back test it. Our back test is a little slow, but I'm just going to give the scan out and you guys can back test it and optimize it. I'll tell you, it works best for like a 1-day hold, and definitely works best in the first, I would say using East Coast time works best probably between 10 o'clock and 11 o'clock East Coast. Yes, of course, Vincent, I would never, ever tease you guys with a setting and a scan and show you a bunch of examples, talk about it, and then not give it to you. So we'll go ahead and do that. Unless there's anything else I need to contribute towards that. All right, I will drop that in the GoToWebinar chat window. We'll call that the horseshoe. And the only thing different, again, was I just added the, when I first had this from Dan at Trade Ideas, we didn't have a lot of moving average filters. We didn't have a score composite rating. So I got a mess of ideas thrown at me. Now we have a lot more filters where we can really kind of slow it down and just see the things you want to. All right, so I need to paste that into, it's in the chat window, not the questions box, but the chat window for those of you that want it. Let's see. George Vuzzi was a celebrity place I had peg on Sunday night and didn't wake up in time to put it. Oh, yeah. George, I feel your pain. I missed it too. But again, if I have to sacrifice in order to make a really good call, and the last few weeks, the timing has just been rough on some of these trades, I'll take it. I'm happy to talk about it and hope some of you guys caught it, and hope some of the things that we talked about on the trade management side of it will make sense going forward. So we got about 10 minutes left here. What I'll do is I'll go through the A table, the big guy here, and see if there's anything interesting that stands out to me. And while I do that, you guys can send in a chart request if you want. We can look at a dozen or so charts on the way out. Chris has already got one. All right, I'm going to go through these quick and just see if anything sticks out to me. I will stop and I will put a Price alert on it. All right. Too far above, can't chase that. I love that Discovery A, but again, it looked good on Friday. Can't pick them all. This is not bad. This CLR it's a little messy, but yeah, I'm going to pass on that one. Parts, again, interesting. No, that doesn't look bad at all, actually. Yeah, see, Andy gave me the confirmation. So let's forget that wick and just say if it can take out that little bunch right there, we'll be interested in that. All right. Not going to chase that. That doesn't look bad at all. Bloomin' onions. All right. Well, Texas is opening up. Mississippi's opening up. Places are opening up. The chart confirms the story. Perhaps that doesn't look bad. A really nice catch of the. We're just going to go ahead and mark that one up too. It is earnings season, guys. So make sure you don't take something home. Wait, this one is just Dave and Buster's, similar kind of a thing. Not going to chase that. Viacom looked good a couple days ago, just like when Discovery did, and then 2 days later, it's too late. This is starting to get a little shapely. What is this? Oh, American Airlines, huh? Okay, this is starting to look a little flaggy, isn't it?
Mm-hmm.
Maybe for this one, we'll have a little fun. We'll say, what if it pulls back and touches that 10-period moving average? Maybe we'd be interested and put a note in there. Did it touch an SMA? Contrarian, just kind of eyeballing that one. Another restaurant, Cheesecake Factory. So there's a common theme, Outback Steakhouse and Cheesecake Factory. I don't like the way that thing closed. There's another, that's Under Armour. Okay.
That actually doesn't look that bad. Yeah, at the top of those two wicks. No, I don't know.
It doesn't.
No, yeah.
It's better to know about it than to not know about it. I've been playing around with this one for a while. I'm going to pass on that one. Yeah. Oh, that looks really nice. Spirit Airlines. Okay, so confirmation of another airline. Really, really nice. Boy, I saw that. You know what? I saw this over the weekend, guys. I saw that right there. Actually, I like that better because we're giving ourselves, more of a coiled spring here. 2 more days of coiled pattern means possible breakout. This is probably one of the best ones we've seen yet. Let's go to the intraday here. Look how the 5-day average got kind of a hold of it there. I'm gonna put it right there. I'm gonna say I want to know about Spirit Airlines right above that price right there.
I cheat.
What's that?
I said I would cheat. I would cheat and go like
lower. Yeah, I see.
Yeah, I would.
You'd be back down here.
I would.
Who's texting me? All right, we'll do something like that.
There you go.
All right. Not going to chase that. What do we got left? Oh, there's our friend Voozy. Voozy's broken. All right. Now Voozy just goes back in the heap waiting for something else. It's like a big jump rope. It looked great 2 days ago. And now it's on the apex and coming down and it's nothing to do with it. So for you that, for those of you that are coming to trade ideas that, want a window that's just going to make you all the magic monies. I mean, again, what I said at the beginning, it's human and machine. The machine is giving us a good curated a list of ideas, but it's up to us to pull the trigger and manage the trade in real time. We're getting lower to the lower float here. All right, that's enough of that. I actually had another one in here. I'll show you. I've got 2 price alerts. I've got TGB. I don't want short. That's my own. And TMST. That's another one, kind of a funky one. And those are not shorts. Let's edit that. Be a long. We can edit the alert. Change it to a long. American Airlines was also not a short. So I'll just hand these out as a cloud code for those that want it, and then we'll spend 5 minutes and look at a few charts. Here, 7. Drop that price alerts. All right, that is in the chat window. Let's scroll back a little bit. Okay, I saw Chris was first with CPIX. Interesting, very spiky. It's got a personality to it, under $5, so it never really wants to close on highs or lows. But that spiky personality will probably will persist. But I'll tell you what, it probably doesn't look bad above 350 if it wants to do something. BCOV long. Okay, doesn't look bad at all. It's moved up higher and it's consolidated, and I would say, right above that level right there, you probably would want to know about it. Doesn't look bad. Andy answered that one. GTE. Okay, so this one broke. This one bled. I used the, let's do this. All right, okay. Got all the hopes in the world for GTE to hold that 10-period moving average. Okay, it didn't hold, but it bounced off the backstop, as I called it. Okay, maybe it would have held there, but it's fighting its 10-period. Okay, second attempt at the 20, failed yesterday, failed again today. It's back in no man's land. I don't really like the way that one looks. It's probably heading down here for the 50-period moving average at some point. Maybe another day of selling will find some support around 70, 68. Oh yeah, Amazon and Tesla. Dan, we were short Tesla. So Amazon and Tesla both look weak. I would not be long them. Let's put it that way. We'll just leave it at that. Not be long Amazon and Tesla. TripAdvisor, we went through that a minute ago. A really nice looking pattern back here, sideways, trains leaving the station, reached down, touched the 10-day moving average, and that was it. But up here, it's getting pretty volatile. I would stay away from the volatility up there if you were establishing a new position. Hewlett-Packard, still a thing. Again, got ahead of itself. Very nice trend, but I wouldn't be establishing a position up here. It looks like it's just wanting to consolidate.
I want to add something to that, Steve.
Yeah.
That's a great example of a value play, and you're seeing a lot of that. And you pull up Xerox too, XRX, and what happens? The reason these are holding it. This is what you're seeing. You're seeing a lot of money come out of the momentum trades, the high valued stocks, and they're going into value plays.
Coming out of the Teslas and the Amazons.
Yep. These typically pay a dividend, and you can see it in Steve's single stock window there. There's a dividend in both of those stocks. So that's kind of what you're seeing. And when I start seeing that, I really kind of stay away from some of those momentum plays, because you're seeing it's quite obvious. The momentum plays are kind of breaking down, and you're seeing these value plays going to highs.
Yeah. Somebody's asking if we buy puts on Amazon or Tesla. I mean, that's up to you. Options are a different animal, but we are short common stock in our fund on Tesla for the second time after a good first trade. So bearish on Tesla for sure, but trade it how you want it. There's many ways. RRD was another one. Is that RR Donnelly? Wow, that's an old name from the past. That's probably what you were just talking about too.
Yeah.
Do they have? Where am I looking? Do they have a dividend?
A small one, yeah, but probably got a decent PE ratio. I don't see your PE ratio on there, but
yeah, something happened to them. I wouldn't chase it up here, but it definitely has come to life. ERJ. I don't like the way it broke that 10 period. Now it's going to need that 20 period as a backstop. It's kind of in no man's land there. We did HPQ already. SAV, I think somebody's asking about. That doesn't, oh yeah, we talked about that one already. We like that one, don't we? We like Spirit Airlines, even though we don't like flying it. We like the way the chart looks. I don't like being charged $55 for an extra bag. Hey, we did that one. Okay, OSK. We got about 4 or 5 more. Then we'll bring in Scott. Oshkosh, setting up nicely. Big, working off that big move it had. Great volume. Just keep an eye. Once it tags that rising 10-day moving average, it might be on. These algorithms, they need a stupid light switch to go over and flick like an OCD patient, and maybe that's what it needs before it reverses and the quants start buying it. Did we do Snap? No, we did not, and that was a Holly play today. I like the way it's consolidating. It just needs to work itself out, but not bad. It's had a pretty good run too, where it's come a long way. So these things are getting really volatile up here. It might be a microcosm of what's happening in the Nasdaq, as I mentioned, these giant volatile candles swinging back and forth as there's a tug of war of ideas. All right, ACY. This will be the last one, then we'll bring in Scott, because I'm probably talked out. ACY, that's kind of a messy one. I'm not really liking that one. If that's the way I typed it correctly, hopefully. Yeah, maybe there's a story there, but I don't like the way that chart looks at the moment. It's, it needs to hold $9.50. Let's say it needs to hold the 50 period moving average, and you should be good there. All right, well, I hear Scott come on, so I'll bring up the slideshow and let him talk at you, and we'll just talk with you next time. Hang on a second.
Yeah, thanks, Steve. Thanks, Andy. Just a couple of reminders on the way out. We do have that earnings season ebook. Go ahead and grab that before it's gone. Go to tradeideas.com/earnings. Very useful on how to take advantage of earnings season. It's got some strategies in there. You can import via CloudLink too. We also have a podcast. They come out periodically. If you subscribe by searching for Trade Ideas Podcast, hit the subscribe button. You download the newest episode and be ready to pick up the next one as soon as it comes out. And there's also some back issues. You can listen to some previous episodes that we released. Have some good interviews, insightful stuff. As a code, use the code OPPORTUNITY, 15% off your first month or year of Trade Ideas. Use that for a new subscription or an upgrade. You can find Steve on Twitter at TodayTrader. We also have at Trade Ideas and some other handles. You find those if you follow one. Trade Ideas Pro is the Facebook page to like and share with your friends. And if you have any questions, send them to info@trade-ideas.com. You get an email reminder tomorrow with a link to the playlist where you can find the recording of this session. So stay tuned for that. Thanks, everyone. Thank you, Steve. Thanks, Andy. Have a good rest of your Tuesday. Bye.